Oh, hey there. Yeah, welcome to Too Long It Didn't Read Finance Edition, where I'll be talking about some personal finance and trading with a little bit of a TLDR version up front. So stick around, like, subscribe, comment, and here we go. All right, and welcome back. So we got week 3 update of the trading account, and this last week hurt. I had a lot of mental calming myself down. Didn't throw anything, didn't break anything, but definitely the fun part of trading. You got the lows and the highs, and this was definitely one of the lows. So we had some earnings as well. We had a little bit of maintenance on the ongoing 30 to 45 day trades. Um, and then the earnings really kind of nipped us in the butt this week. So, four total, I think. One that I mismanaged, definitely shouldn't have been as greedy. Could have saved myself a big headache there. And the rest of them just kind of took off in the wrong direction. So we'll go through them, and then I'm also going to talk a little bit more about how I play earnings and why some of these could have been some better trades. So starting off, we had 17 trades last week, 24 fills. Some of them got kind of broken up, but 17 trades. So pretty active. And so we started off with resetting our core position on the Russell 2000. That's this rut here. We reset the put spread. Nice credit there. That's doing great. A little down today on the 25th, just because the market kind of fell off, but it's still in great position. Citi. So Citi had earnings last week. And I think we even did okay on those. And but it fell pretty far. So when it falls pretty far like that, I like to basically wait to see if it will flatten out and kind of hold a certain level, and then I'll try to sell a spread. Whether if it's if it fell, I'll do puts. If it went really far ahead or above, then I'll do calls. It should be a little bit greedy, but also it's a pretty this is something I'm testing to really confirm the numbers, but it's in the past it's always done really well. Of a high percentage chance that it's going to rebound the opposite direction shortly over the next 5 to 15 days. So kind of an easy trade, easy couple bucks. So we'll see how that is. Of course, Citi's fallen a little bit further even since, but it's holding about 60, which is right where I thought that level was. So that one should be good, but we'll see. Baba closed it out for a nice little profit. That was all on Tuesday when the market opened after the holiday. Netflix earnings. So Netflix was supposed to move, you can do the math here, about 32.5, 33 points was the expected move, which is usually right about 68% of the time if you know your standard deviations. So I was about 69, 70% last year after about 300 of these, so felt pretty confident. But of course, it was one of those times Netflix took off. I think it finally moved by the time it closed the next day about 85 points. So would have been great if I had calls, but did not go well for my trade here. Because if you see, I sold the 502s and on put and call. So what I wanted to do is I wanted to just stay within the range. Whatever the range is, I want it to stay right in the middle, or as close to it as I can. So it can work. We'll talk a little bit more about the DFS trade, which could have gone better, and how that really kind of works technically. So SPY, that was a core position. We closed that as well. DFS was another Discover Financial. This is another earnings trade that happened. So we opened that. That was on the 20th. Sold a Netflix call, so this is similar to the Citi. So the day after earnings, we sold a Netflix call at 5.95. That was kind of a level just above where it had kind of been stagnant after its huge run. So I figured it would fall pretty nicely, and so far it has done so beautifully. It's about 560 right now, so that'll be a nice trade. Reset our core position on SPY. Intel had earnings last week as well. So we had Intel, Seagate, and IBM all on Thursday. And then we're coming out here. We already closed out our SPY. No. This was another core position. Aha, because I meant to reset to close out this SPY position before resetting here, but the order never triggered and it was a day order, so it expired. So I didn't realize I actually had two SPY orders on. So that's why I closed this one, reset with this, and then close that 2 days later for, oh, I had an extra one. That's what it was. I had two here, only closed one of them because I wasn't checking. So there you go. Closed our Seagate. So Seagate actually was a profitable earnings trade, even though the news was not looking good. I just reset. I took in 267, so I immediately reset the trade to close it for the next morning at somewhere just shy of the 267. We filled immediately without doing anything that morning as soon as the market opened, because it opened kind of near before falling off, and so we got a small profit there. Similar with Intel. I saw, as you see up here, I got 264 credit. I closed it for a 230 credit. Again, right at the open. I'd already set this. News wasn't looking ideal, but it was opening near where it closed the previous day, which is what I want. So a small win there. And then, let's see here. Discover, I closed out, or no, I sold a put. This is similar to the Netflix and the City. Discover fell pretty far, so I was going to sell puts thinking that was a good level and that it would rise from there or rebound after its fall, because again, it wasn't supposed to move as far as it did. The range was supposed to be 5 points. It moved almost 10, so not ideal, but we should be able to make some quick money back on this trade here. And of course, I tried an SPX option on, was that Friday? That did not go well. Lost about 240 bucks there. So these are no longer allowed in this account, so we shouldn't see any more of these moving forward. I set up another account. It is all set up on our longs. Probably won't talk too much about that, but if I obviously have a good trade to show you, I will. And then if you notice, there's no closing trades for IBM or DFS earnings trade. It's because they expired in the money and the platform took care of closing me out, exercising the trades, getting the shares, selling the shares, and getting me to a net number at the end, which unfortunately was, yeah, it was about, so you see we're about 4,300 now down. So the difference for last week was about almost 3 grand. So yeah, so that's why definitely a low point of the trading so far. But that's earnings. So earnings obviously can do the opposite. This week we've got a ton of them, probably at least 10 or 15 that we'll be doing. And I'm feeling good. So the one thing I did want to show you, well, two things. So we're going to show the DFS trade, and we're going to talk more about how I trade earnings. Let's squeeze all these down. So we had earnings back here. And I have a scan, just like the implied volatility scan I showed you before. I guess we'll show you that real quick. So earnings, so I just have a flat number. It's got to be at least $75 price so that I can get enough premium from the credits. It's got to have some sort of trading volume to make sure it's liquid, 70% of implied volatility or higher, and then earnings, and it doesn't have, sorry, it has earnings in the next 2 days normally. I did 5 to see what I'm up to for this week, and it spits out all the earnings that are coming up. And so then I'll just watch, and so we've got Apple on the 27th. I think Xilinx is the only one tonight. Yeah, 5:21 after market. So it's actually tonight. So I'll be placing a trade on this one. And again, most of my earnings trades, this was closing on, we're back to Discover. So it was closing right around the $99, $100 strike. So I'll sell the puts and the calls at the 100, and I'll buy some wings out above and below for protection. What I want to do ideally is that the price opens up right around here, and that would be great because I'm selling options during high implied volatility of earnings. And so the next day, once that earnings event is over, that implied volatility is gone. And so an option might be priced at $4 because of earnings, and then because of that inflated volatility, and the next day it could be 2 for the same thing. If nothing happened, the price stayed the same, just that volatility is gone, it could lose all that. And so if I'm selling, that's beneficial for me. So it's been working well with these earnings trades because I not only don't care too much how much the price moves, it needs to, I mean, it can move. I expect it to move some degree, and I expect it 70% of the time to stay within its expected range. In this case, it was $5 either way, up or down. And then I have the added kicker of this volatility leaving, which is all going to my pocket. So as you can see, right as we opened, So it was kind of looking trending down, which is, I definitely saw that coming. Um, but it did, it beat earnings, right? 227 versus 260. So beat earnings, beat sales, but the revenue missed a little bit, And I saw that in the news, so I didn't think that would be that big of a deal. And so I got a little greedy. And so especially, and part of this is the mental game. I just lost a bunch of money on Netflix the day before. I thought we could make some of it up with this, and we could have, but of course, got too greedy. So with this little spike up here at the open, I could have gotten out for about 210, 225, absolutely. Maybe even like two flat, which I sold them. If we look back over here, I sold them for 317. So two would have been a little over 100. 225 would have been about 100 a piece. A little less than that on five. So it would have been $500 profit, right? That one was a given. I saw the number come through. It got as low as 206. Definitely could have gotten out for 215, 220, no problem. But I didn't, because I expected this little thing here to continue. So obviously it did not, and it started to fall. And so because this was, I think, Wednesday, I had a couple more days still, so I figured it might rebound with what it was. So of course it didn't. It went on, as we can see here, to continue falling. So it ended up being a max loss max loss of about $1,000. So a $1,500 swing, so not ideal, right? So I lost $3,000 instead of losing three. I could have only lost what, 1,500, $2,000, even though the other trades didn't go well. So just poor management there. I'm trading these earnings plays for the volatility leaving, not for the movement. So I had to remind myself that, and my sisters hated me because I reviewed out loud last year's trades, talking about the percentages, how many times I was right, how many times I did it, and that losing is a thing, but only if I'm sticking to the rules, sticking to the plan, following it as robotically as I can. In this case, I did not. So unfortunate. But it just goes to show you that the way I trade earnings is, even though I could be wrong in the direction, I don't really care about the direction. All I care about is that initial opening few minutes. Can I get out for less than the credit I receive so I can keep some of that credit? And in this case, it should have been, but of course it wasn't. So not ideal, but that's a bit more of how I trade earnings. Like I said, we got a couple of them coming up this week. So knock on wood, it'll be a nice positive week for us. I'm telling myself this, I'm not going to shoot to try to make all that $4,000 back this week, but just shoot to be right with how I'm managing the trades, not screwing up like I did on DFS. And yeah, so thanks for watching. Hope you guys are enjoying this sort of stuff. Talking a little bit about technicals and a little bit about scanning and all the different tools within Thinkorswim that I use on a regular basis. Love to start some commentary about what I'm doing, what you're doing, and how we can help or grow this moving forward. So like, subscribe, comment, and love you guys. Thanks for checking it out.